Limelight session with the topic, the role of innovative financial inclusion in post-pandemic economic recovery. By Vice President Operations 2 ADB, please welcome Mr. Ahmed M. Saeed.
Thank you. Good morning. Salamat Pagui. Before anything, I wanted to begin with a word of congratulations and wanted to extend my very sincere congratulations to AFTEC, OJCAR, BEI, and all the Porcan FinTech Nacional 2020 supporters, as well as, I think, even more importantly, to participants in this very, very important and very successful and productive 2-week-long FinTech Summit. I wanted to begin just by saying a word about the relationship between innovation and development progress. Because innovation and the work of this summit really lies at the heart of making development progress. We speak often about gains in income, gains in GDP, and of course we understand development to be a much broader process than growth in income. But focusing just on income for a moment, income gains come from productivity gains, and productivity gains come from innovation. And so the work of innovation is the work of development. The work of innovation is the work of improving the quality of human life. But I would say even more important, or at least equally important to the task of innovating, is the task of disseminating innovation and promoting the adoption and sharing of new ideas, new products, new ways of doing things. Forums such as this are absolutely critical to that dissemination process through the means through which ideas percolate through an economy and ultimately affect the lives of all within it. And so I want to commend the organizers and those participating for engaging in work over the course of the last week that is critically important, and I also believe very, very noble. What I was hoping to do today to talk about here as we reach the closing of the summit is to just touch on 3 subjects. The first is the impact of COVID-19. The second is the importance of financial inclusion and digitalization, particularly in light of COVID-19. And the third is the role of the Asian Development Bank and other institutions like it. So let me begin with the current context and the current pandemic, which is really the single greatest challenge we will all be confronting over the course of the next year, and I think as we seek to recover from it in the years after that. Now, this new global pandemic is something really that none of us have seen before, and as a consequence of that, there is much that we don't know. We don't know even today, almost 1 year into this, how long it will overtake to overcome the pandemic, what will be its impact, medium term, longer term, on Indonesia, on the region, on the global economy. We don't yet know clearly its impact on people, on their healths, on their livelihoods, on their behaviors. And indeed, we do not yet know its impact on the financial sector and on financial services, including on issues like financial inclusion, as well as on the viability and health of financial sector balance sheets. What we do know is that this pandemic is having an enormous immediate economic and health consequence. Indonesia, a country that entered this crisis on very, very healthy macroeconomic footing, has experienced significant GDP contractions in recent quarters and is expecting the first recession in many years in 2020. I would emphasize, not just do we see this reduction in top line numbers, but very, very importantly, the human cost of this is disproportionately borne by the poorest. Poverty is increasing, inequality is increasing, unemployment is increasing. The sectors that employ great numbers of people, transportation, hospitality, hotels, restaurants, these sectors are disproportionately affected. The sectors that consist of thousands of micro and small businesses, businesses owned by men and women who not only provide essential services, but also struggle to support families and livelihoods, these segments of the economy are the most affected. And so as we begin our conversation, or I should say close our conversation at the end of these 2 weeks on fintech and on financial inclusion, I think it's so important for us to remember the backdrop and the backdrop of this extraordinary crisis. As we move forward, it is very, very clear that financial inclusion will become even more important than it was before. In part, this is because there is the risk and the reality of ground lost in development progress. Indonesia is a country that in fact made great progress in financial inclusion. In 2018, some 56% of the adult population owned a bank account. This number had risen 20% over the course of only a year to 76% in 2019. It'll be critical to make sure that these gains are not lost, but that they're actually built upon. And not only has COVID-19 made financial inclusion more important, but it has also accelerated some of the underlying drivers of financial inclusion. Certainly, we are all aware, this forum, its online nature makes clear that we are in a more digitized world than we were even just a year ago. We understand, for example, from the Coordinating Ministry of Economic Affairs that in Indonesia, more than 300,000 SMEs have digitized operations in response to COVID-19. This response, of course, I think we all recognize and know, in many cases was critical to their financial and economic survival. And the government here, of course, has been making efforts for some time to digitize social assistance programs as well, beginning in 2017 in order to improve delivery efficiency. This was a very critical set of initiatives that allowed the government to respond more effectively to the pandemic. And these initiatives bode well for the future effectiveness of the government's National Economic Recovery Program. I would also note that the numbers I cited and the significant improvement in financial inclusion is a reflection of the government's support for the rapid digitization of financial services. This includes a focus on fintech adoption, on efforts to promote financial inclusion through innovative approaches and to accelerate the economic recovery process. For example, eKYC is a tool that has facilitated onboarding of large numbers of previously unbanked people into the formal financial system. These digital-based financial services have offered lower cost, ease of use, and faster services. And financial technology can be used not only to increase access for underserved populations, but also as a means to provide digital financial education and to increase financial consumer protection. Access to finance, along with financial literacy and consumer protection, are key to responsible financial and digital financial inclusion. This, in turn, enables the use of various financial services by the underserved and opens up opportunities for them to achieve their full potential and for the country to be on a path towards economic recovery. Now, in light of the importance of these subjects, I wanted to highlight some of the ways that we as an institution are engaged and help. I would say in the first instance that we begin with a deep recognition of the enormous importance of pushing for more digital technology-driven development and innovation in Southeast Asia as a means to addressing both long-term development challenges as well as more pressing near-term needs brought to the fore by the pandemic. And we will be working with Indonesia and other countries across the region to find ways to address regional disparities and to ensure more equitable access to technology. As many of you will be aware, the ADB has a long partnership with the government of Indonesia and OJK in supporting financial inclusion for development. Our shared vision includes increasing access for underserved population segments to financial services through financial sector innovations such as fintech. We also share the view that enhanced financial and digital financial literacy and financial consumer protection are critical ingredients to responsible financial and digital financial inclusion. In this context, we are very pleased to see the solid progress that the government of Indonesia has made towards its financial goals, despite or indeed because of the challenging times. The progress was also due in part to close collaboration with the private sector, including AFTEC. And we're proud of our own affiliation with these efforts and their early successes. We will, of course, be making efforts to build on these. And I'm very pleased to share with you that we'll soon be taking to our board for approval the Promoting Innovative Financial Inclusion Program. an initiative that is dedicated to financial inclusion in partnership with the government and facilitated through the Asian Development Bank. This program aims to support policy and technology enablers to foster innovations to accelerate and enhance financial inclusion. It will support tools and infrastructure for financial inclusion and seeks to increase access to finance for MSMEs, as well as for marginalized groups, including women and the young. The program will strengthen the regulatory framework for digital financial services, data privacy, consumer protection, and financial and digital financial literacy. I'd like to share 3 messages on the role of financial inclusion in fintech for Indonesia's economic recovery, and I wanted also to provide some examples of ADB's initiatives in these areas. First, we can help Indonesia establish a robust regulatory environment and strengthen institutional capacity to promote digital financial innovations. Regulators would need to both foster technological innovations as well as ensure responsible industry conduct. ADB has been privileged to provide extensive support to OJCAR's Digital Finance Innovation Group in our role as industry accelerator, incubator, and regulator, or in their role, I should say, as industry accelerator, incubator, and regulator of the fintech sector. In line with the Digital Finance Innovation Roadmap and Action Plan 2020 to 2025, ADB has provided assistance in the regulatory sandbox, digital finance regulations, RegTech, and supervisory technology frameworks. In addition, ADB has provided knowledge support on accelerating financial inclusion in Southeast Asia through digital finance. Second, we can promote collaboration with the fintech sector as a means of expanding financial services to MSMEs and the underserved, such as women and youth. Leveraging on fintech, there is a significant opportunity to incubate and develop MSMEs, recover in the short term, and become more efficient in the medium to long term. Together with OJCAR, ADB is supporting the Eastern Indonesia Financial Innovation Lab. This initiative supports regional development banks to use innovative technology solutions in partner with the fintech sector to expand financial services to medium and small to medium-sized enterprises, micro to small and medium-sized enterprises in Eastern Indonesia. ADB also supported the recently launched Lokar Siku, a geospatial financial services mobile platform by OJCAR, which enables one to locate branchless banking agents and other financial services, thus facilitating financial inclusion. Together with MasterCard, we are also working to leverage private sector partnerships to support Indonesia through a pilot program in Bandung that connects warung, 70% of which are owned by women, with distributors and consumer-packed goods companies using a fintech platform. ADB's private sector operations will expand its microfinance risk participation and guarantee program to include more Indonesian microfinance institutions. In addition, through ADB Ventures, a new venture platform that will support and invest in startups offering impact technology solutions, we are investing in fintech companies that are providing services such as credit scoring, KYC, payment, and collection to online lenders of MSMEs. Third, we can support promoting both financial literacy and digital financial literacy in Indonesia. We have been working extensively with OJCAR to produce financial literacy and digital financial education and consumer protection materials. ADB supported Indonesia's participation in the PISA, including on financial literacy. The PISA is the Program for International Student Assessment. It further supported OJCAR to develop and launch e-modules-based financial literacy materials for elementary and high school students. More recently, ADB supported OJCAR's financial literacy materials for early childhood and digital financial literacy materials as part of Smart Digital Indonesia. ADB's interventions in this area also include innovative programs such as Y-Bank, which piloted in 2019 as an experiential financial education and career exploration program for Indonesian youth. I wanted to conclude by noting again that COVID-19 has forced us to confront some enormous and significant challenges to development progress and to improving the livelihoods of those most in need. However, I believe firmly that economic recovery and financial inclusion must move hand in hand, and that achieving these goals will require the collaboration of the private sector, of industry players, of fintech providers, and regulators such as OJCAR and BEI, as well as the government through instruments such as the Ministry of Communication and Information Technology. We at the Asian Development Bank will do our part in coordination and collaboration with other development partners to support these efforts. We look forward to continued success. Let me conclude by offering my congratulations once again to PURCON FinTech Nacional 2020 organizers and all of those who've made and played a role in making this such a successful, important, and memorable event. Thank you so much for providing me the opportunity to share the perspective of the Asian Development Bank, and we very much look forward to future collaboration with this forum.